Hello, everyone. Good morning. Happy Tuesday. I do not like Monday holidays. I like Friday holidays. I don't like Monday holidays because it screws me up for the rest of the week. It takes me to pretty much Friday to get back into the swing of things. For some reason, I keep thinking today's Monday. I'm going to keep doing it till Friday. Oh, good morning, Sterling. Good morning, Patrick. I will give you a call this afternoon. Thank you, Sterling. Hello, Stafford from Chicago. Thank you for tuning in. Hope you are well. Good morning, Jacob. That's fine. You're busy with work. That takes precedence. Anytime you can put in the news, it's just appreciated. It's not required, Sterling. You don't have to apologize. We appreciate everything you do for the channel. Hello, Charles. Good morning, Ted. So, see, Sterling, you always do the Lord's work. Any help you can give people is great. Charles doesn't want to trade this week. We got some numbers coming up Friday, especially non-farm payrolls to close out the week. Good morning, Richard. You know, I did not want Labor Day to be over so quickly, and it was a super busy weekend, so there was no rest here. So you know what? I want a Labor Day do-over. But also, not market related, we had college football this weekend. The U.S., we had by football, I mean football, not the European football. And we have NFL kicking off on Thursday. NFL kicking off for all the football fans. So, we've officially started football, fall season football. Now Labor Day's out of the way, so it's, you know what? Summer's over. Summer's over. Back to the grind and back to the historically worst performing month of the year for the stock market. So we're into that window. Does not mean it has to be the worst performing this year. Historically, you know, people associate October with crashes, but September is the most potential downside of the market every year. So keep that in mind. This year could be different. John with the exclamation point. No rest for house hunters. Yeah, I'm giving up on housing. I'm giving up on housing. We got Woo and Go Niners. Jacob, Go Niners. Okay. All right. They gonna make it to the Super Bowl, Jacob. What do we got today? Today we have ISM manufacturing numbers coming up. We have the S&P, the minor ones, the small middle cap, which is still projected to be in contraction. The headline numbers still expect to be in contraction. I think it's more important to watch the employment component and new orders and prices. I'm really going to pay attention at 10 a.m. Eastern to the subcomponents, not the headline number, the subcomponents. To see, especially new prices, to see if that's pulling back at all, if new orders are dropping, and if employment's dropping within that. Other than that, what else do we have? Not much. We really don't have much. Tomorrow, we've got Red Book tomorrow. We've got, which would normally be today, but it's tomorrow. Because of the holiday. We've got the mortgage information. We got JOLTS, which would normally be on Tuesday, but they're on Wednesday now. And we have the Fed's Beige Book. Always interesting reading. Thursday, we have jobless claims. And we have the ISM services numbers. And then to round it out, Friday, non-farm payrolls. Last non-farm payrolls before the potential cut. Will this bounce back on Friday from 4.3? Consensus is 4.2. So it means if it comes in at 4.3, they could maybe do a double cut. I think it would be a mistake, but we'll see. Market's still pricing in one cut. The map today, pretty. You got Tesla up a bit, but that's about the only green thing in a sea of red going into the open. Groups, let's just do a quick refresh. Everything is negative today. Starting off the Tuesday, everything being led, crude's been dropped down to test triple bottom territory. Energy's dropping. Basic materials, technology, comm services. So there's a lot of reds starting off September, first trading day. We still have the one single cut. The single cut is the highest probability for September and then November. Fear and greed, we are solidly back to greed mode, but really moving sideways after the quick rebound when the world was falling apart because we had a drop. And markets are not cheap, and overall sentiment for the markets is at all-time highs. People are bullish through the roof on the market. Going into September, we shall see. Today, after close, you got Zscaler, GitLab. Very quiet week in earnings. Tomorrow, Dick's, Dollar Tree, Hormel. Dollar Tree will be interesting after the disaster with Dollar General. But, you know, this is not a week that anything is going to move. There's not something that's really going to move. The biggest thing to this week is Avgo, Broadcom. So that's Thursday after the close, going into non-farm payrolls. If there's something that has a potential to be market moving, minor market moving, it's Broadcom. So that's where that sits. So really, we just have to pay attention to Thursday afternoon. All right. You think the Niners got the same bug that the Bills caught in the 90s when the Bills kept going to the Super Bowl but never managed to win one? Who said I'm still rooting for the Bears? I got to root for the Bears. I've got to root for the Bears still. Whenever I've lived other places, I've always, always had to root for the Bears. What else? Whoosh on crude again? All right. Yeah, Fridays. See, Friday holidays are the best. Tuesdays become Monday and the whole week is messed up. Completely agree. I have somebody else. We completely agree, Patrick. The week is messed up. So let's just make, you know what? Holidays should be on Friday. Okay, just like July 4th. Just make it, call it Independence Day and make it the first Friday of July. Let's not have, Wednesday holidays are even worse than Mondays. Who wants to work a couple days, get a Wednesday off, then work a couple days? Let's just make holidays on Fridays. For the most part. Thanksgiving, let's make it Thursday. Let's just have everything shut down on Friday. We don't need to shop. You know what? So that's where it sits. Good morning, Martinez. All right, let's take a look at everything. The S&P, there is no topping formation. This is a multi-top up here. You see, this is just a mess. It's starting to try to roll over. The thing that will get me, we have a very strong clear path move, but I need to see a break and then a follow through close below last Thursday's low. So far, we've rocketed up. We've rolled over, gotten daily cycles back down, but not broken out. On a weekly basis, we're getting weekly cycles to the top. They will probably be topping this week. So, even with a move up, we're looking to get into possibly topping cycles at the highs. We could even eke out new highs, taking out the highs for mid-July, but it's really waning in momentum on this. We had the strong bounce back push for like 6-7 days, and then we've gone nowhere. So to the downside, I'm paying very close attention to last Thursday's low. All right, because Friday we also had the window dressing, especially at the end of Friday. I mean, end of Friday, here it was. I mean, look at the end of Friday, just boom. I mean, Friday was looking like it was going to end sort of down for the day, and then the massive window dressing at the end of the day for Friday. So that's why I'm paying very close attention also to Thursday's lows, because Friday set up a key close area that was also about a high from last Thursday or Friday, Friday prior week, and then Monday of last week, and then around Thursday of last week. So we have some very key resistance. 55.62 area on the futures. 55.62, 55.65. If we break out above 55.65 for this week, 56.96 to 56.700, 57.20, and then if it plows to new highs, the next major harmonic is 57.96, which would still keep it in potential double top territory. I hope I don't miss an easy short today. Hopefully equities hold the R zone and tomorrow follow through. Mike is my data provider for today. I'm really watching this rotation zone, which is also the key, again, the key low from last Thursday. If it did break below there, minor support then would be about 55.20, and then we're into a clear path move, and the overall key levels on the bigger pullback would be 53.95 to about 53.30 into that zone. I'll be watching that on any bigger pullback if we do roll over well before we potentially trigger the massive double top. NASDAQ, gone a whole bunch of nowhere. Interestingly enough, we're still trading back at levels from June, the end of July, and we're still going a whole bunch of nowhere. And the NASDAQ still hasn't taken out that 75% harmonic. So the key thing, very key level I'm paying attention to in the short term, let me pull this line off, is this right here, this 19,695 area. 19,695 is key for any bullish move. Again, Friday or Thursday's low, if we can't remain above that, we close below it, then I'll be watching for the pullback area. And the key target, my key target would be about 18,700. 18,700 on a pullback if we take out Thursday's low. Other than that, we still have on the NASDAQ daily cycles turning up, weekly cycles getting to the topping area, which will probably top out this week. So I'm going to be paying a close attention, especially going into non-farm payrolls, for a potential top pattern. But in the short term, again, Thursday's low is very key. Minor support level in front of that is 19,400. 19,400 is a key minor support level we're trading just above right now. The Dow, remember, we slightly eked out on Friday. What was the high? 41,674, taking out 41,672. So we did retest the high area with a divergence, getting to weekly cycles at the top. And there's still a potential, this is a lower probability double top. I'm more looking at these levels if it were to trigger as potential target areas, because because of the stair step move, it's one of the lower probability doubles. So I'm just sort of using it as a guidepost, but we're a long way off from not even triggering, and we're a long way off from even the breakdown zone. The key level I'm looking for the Dow is Wednesday's low area. Wednesday's low area, which is roughly the 25% harmonic and the bottom of the daily rotation zone. So any pullback still where Wednesday's low holds on a closing basis and we hold the rotation zone is just still an ordinary pullback. We start closing below the rotation zone and Wednesday's lows, I'm shifting, especially with the major divergence and being where we are with September and everything else. So I'm keeping a close eye on that. Now to the upside, if the Dow takes out Friday's highs, 42,060 area is the next minor target. By the way, if it hits that, the double is still potentially in play. The Russell, the Russell still on this little mini move. There's been no close above the 62.5 on the daily. We still have this mini double top. So for me, the Russell, the key point is the low from last Wednesday. Also, just like the Dow, not Thursday, like the S&P and NASDAQ, it's Wednesday's lows for the Russell and the Dow. So that's what I'm watching here. That's for the trigger. But although my key target area would be the second target for that double, which comes in around the 50 EMA. And that's around 2,150. To the upside, on a closing basis, still, we need to get and follow through on a daily closing basis above 22.25. Other than that, that's still key resistance. The VIX still elevated in the mid-16s. I will shift to more bearish mode now. Since we're making a really nice channel here, we have to start getting above about 17 and then sustained above about 1750 before I'm in more sustained short-term bearish mode. The DAX eking out some new highs. There we go. Just like the Dow, but you know, this is a quad top now with really waning momentum. A quad top with waning momentum. If it breaks higher for the DAX, we're looking at 19,250 is the target area. Before I can get bearish, I'm keeping an eye on this prior resistance becoming support around 18,630, which was the rotation zone is going to keep rising in that area. So if we start closing below that, I'll start watching for more breakdown plays. Notes starting to climb again. Notes are looking to break out potentially. Keeping an eye on this 113.31 to 114. You start plowing through there. I'm going to watch into this long wick from Monday, August 5th when the sky was falling. And from a yield now, we're still well above the yield lows. In order for me to get bearish, we're still held. Okay, we've still held the rotation zone. We've poked above it a couple times, but we're rotating back down. Going into non-farm payrolls with a yield drop, though, I'm still watching 377 as a key target area. 10-2s, trying to pull back a bit, but still technically above zero. And we're still making higher highs and now higher lows. So even on a pullback with the 10-2 yield curve, going to be watching for the next push higher. Dollar index we've had that short-term bottom we talked about last week, no longer-term bottom. So now I'm watching for the key pullback here to set up a potential stronger topping pattern. Very key for me and the short term is this $100.80 area. That's very, very key for me. Now, if this does not pull back and we manage to take out roughly about the 101.60 area, I've got to shift to short-term bullish mode again, because we would have then put in a bounce with a little pause and then taken out the rotation zone. But more so, I'm watching for a slight pullback or at least a continued pause to work off cycle tops. We're at cycle tops at the dollar on the daily. We're still climbing on the weekly. So that's why I'm not watching for the super big pullback and something like a potential double just yet. Crude. We were holding, before I started the live stream, we were holding support. Now it's not looking like that so much. So back to the daily chart. We made this key low, a slightly lower low in August. We see stair step down higher lows, and now we're taking out those lows. So I've really got to, in the short term, focus at $70 and then possibly all the way getting back to the 68.50 area and testing the lows from last December, from December of 23. So I'm paying very close attention to that area. That's a very key target area on breakdown plays. From my perspective, gold starting to really makes more of a rollover top here. A rollover top. Watching this key area right here. Happens to be where the bottom of the rotation zone is. This prior resistance tested and confirmed support. So on a closing basis, we're looking at about 25.12. We start breaking below there, we could easily retest the 50 EMA. Gold's been waiting momentum. Silver, we've still never invalidated the double top. Never invalidated it. Did not close above the retracement 62.5. And it's headed back down. Now in the short term, if you're a short-term player of silver, the key area you're going to watch for if it continues to pull back on a closing basis is 27.90. All right. I haven't been bearish equities, Coco. Do you not listen? Long term on bearish equities. Yes, until gold makes a longer term topping pattern. In the short term, I'm more neutral gold now. In the long term, it's still bullish because there's no topping pattern yet from a long term perspective to invalidate the long term bullish mode that's been triggered for months. Examine your theory here. The European and North American economies are being propped up by intentional, massive, unchecked migration. I think they're doing this for economic reasons. Thoughts? I think there's a lot being propped up. And it's not just immigration. There's a lot being propped up by also massive government spending, massive government hiring. It's what's going on now is just not sustainable. Not sustainable. But can it continue longer than we think? Yes. How the housing market is going to go down when we start cutting rates. You're talking about this Fed cutting rates? Now remember, mortgage rates will drop a bit, but mortgage rates are tied to the 10-year. So if the 10-year gets sticky, remember the 10-year can pull back, but you also have, we're also running at still an over a 2-point premium. We're running still a hefty premium to the 10-year with mortgage rates. Now, the Fed can cut, and if the 10-year continues to pull back, you'll get a drop in mortgage rates. What a drop in mortgage rates will see make housing more affordable based off a mortgage rate perspective, but more people, inventory sitting there, and more people will start listing. Like Phoenix levels are getting back to where they were in 16 from an inventory level. If rates drop, you'll have more people put their house on the market. More people put their house on the market. The people who want to sell will get more competitive. So it will get more and more inventory in the market and slowly drive down the price. Now, if we then couple that with a recession, then you'll get the bigger pullback. If the market just keeps trudging along and we, stay in this sort of artificially propped up government stimulus money, then, we could get a minor pullback in housing, but it will still stay elevated. What's housing's roughly running at 6 times income though, which is not sustainable long term. Either incomes have to rise, and incomes are starting to stall out. Incomes are starting to stall out roughly at the pace of inflation. So yeah, they're rising, but they're still rising roughly in line with inflation now, which doesn't give people extra spending money, and housing's still very, very expensive. It is being propped up, and people are spending like there's still they're buying like, hey, like we're gonna get stimulus checks again. So we'll see. Yen, we finished a little mini double bottom. We finished that out, but if you're looking at the daily, closing just below the rotation zone and still rotating back down. What does that mean? We still have the bigger potential double in play on the yen, but today's high is very key for me. If we start taking that out, I'm watching for a bullish move to the upside and then a close above the highs from the mid-August. If not, that's in the short term because the little mini patterns played out. I'm watching for a pullback in the short term. Where do we sit? Euro, watching for a little bounce move in this to set up a bigger topping pattern. Spiders, the key low on the spiders is Wednesday to watch for with the bottom of the rotation zone. So Wednesday's lows is very key in the spiders. The Qs, it's Wednesday's lows. Remember, futures have Thursdays. So that's where we sit with that. Take a look at a firm. They beat on earnings, have broken out on weekly bull flag. When you have a buy now, pay later, they can beat. Oh boy. Yeah, they did beat on earnings. I did not look at that last week. But they're still negative. Oh boy. Hold on. I'm just looking at some of the numbers here. From a fundamental thing, I'd be looking for another rollover play in this. In the short term, could it easily get to 48.70? Yeah. On a continued run higher. But that would not be a long-term position I'd be looking to establish on the bullish side. Fundamentally, I'd be looking for a rollover play in that. Technically, I wouldn't touch it to the short side right now. I let it hit some of these other key harmonic levels higher, especially this 48.70 area, which is where it topped out in February, and prior where it established this double top back into last December, and then it bled down. So, all right, let's peek in at the markets. They are open. Again, not much to talk about. I mean, in the short term, before Thursday's lows, Friday's lows, but really it's Thursday's close area. It would be more key today on a continued pullback for me. This 50 610 area. And the tick, moderately negative opening. We've bounced in the tick back to 0, but no real bounce. So on any bounce play, unless the S&P can sustain something about 56.35, I'll be watching for rollover plays. That's where we sit. Hope everyone has a wonderful trading day and a wonderful shortened trading week. Remember, things are backloaded this week again with non-farm payrolls because of what that will probably determine the 25 or 50 cut going into the Fed meeting. The Fed meeting is 15 days away. So, not next Wednesday, but the following Wednesday. And remember, it's also a 2-day meeting. This is one of the 2-day meetings for September. All right. I will talk. What's this? Oh. Or it just could be self-destruction. Remember, policy doesn't have to make sense. Or when we go to war, they want a lot of cannon fodder. They need cannon fodder. What a great way. You want to become legal in whatever country. We're going to put you in the military. You do your time, and if you survive, we'll grant you citizenship. Maybe that's a strategy, Sterling. Because you know what? I don't see potential conflict going away anytime soon in multiple areas in the world. So that could be something too. Not trying to sound like a conspiracy theorist, but it's a potential. Let me know your thoughts on that one, Sterling. And with that, I will talk to everyone later. Bye for now.